Seraphim Space Investment Trust's SSIT objective is to generate capital growth over the long term through investment in a diversified international portfolio of predominantly unquoted space tech businesses with the potential to dominate globally. There are 5 key reasons why SSIT represents an attractive investment case. 1. SSIT is a compelling pure play on the space tech theme. The trust is a rare listed pure play space tech vehicle with a portfolio predominantly invested in private early and growth stage companies. It represents a viable alternative to ETFs focused on listed large caps in the aerospace and defense sector and space-enabling technologies which offer only partial exposure to the theme. Seraphim Space is seeking high-growth businesses that are addressing very large market opportunities that are likely to persist for many decades, providing a long runway of growth and powerful long-term secular tailwinds. 2. Spacetech's liftoff moment is now. Commercial space technology is accelerating, driven by a 10 to 100 times reduction in the cost of access to space. Falling launch costs and the shift to smaller standardized satellites, such as CubeSats, have significantly reduced manufacturing costs by around 60% and compressed development timelines from years to months. By leveraging off-the-shelf components and consumer electronics, universities and startups can now build and deploy satellites faster and more cheaply, lowering barriers to entry and accelerating innovation across the space economy. This is coupled with growing demand for Earth observation from space in end markets like defense, climate change, and insurance, with further demand drivers for space tech services, including connectivity and mobility. According to a report released by the World Economic Forum and McKinsey in 2024, the space economy is predicted to grow from $630 billion in 2023 to $1.8 trillion by 2035. A notable recent example is the joint venture between Rheinmetall and ICE-I, the Trust's largest portfolio company, aimed at large-scale satellite production in Germany. Further upside potential is supported by emerging hyperscale catalysts, including the prospect of a SpaceX IPO, which could provide a major public market liquidity event and valuation reference point for selected parts of the space tech ecosystem. In parallel, the rapid build-out of AI infrastructure, exemplified by xAI's Colossus expansion, is reinforcing demand for resilient connectivity, geospatial data, infrastructure monitoring, and AI-enabled Earth observation analytics, strengthening the role of space tech within next-generation digital infrastructure. 3. Seraphim Space is made up of pioneers in commercial space technology investments. Seraphim Space is a pioneer in space tech investments that has built deep knowledge and deal origination networks. It's supported over 140 companies across its fund management and accelerator activities. Its current team offers a compelling combination of long-term private equity investment expertise with extensive technical and relevant academic and commercial space tech experience. It is the go-to partner for both space tech businesses seeking funding and investors searching the sector for attractive private companies to invest in. 4. SSIT offers a diverse portfolio of space tech businesses. SSIT's top 10 holdings, which make up the vast majority of the current portfolio value, represent a diverse set of business models. The largest part of the portfolio value consists of companies operating their own satellite constellations. Its other major holdings pursue a wide range of business models, ranging from data-driven software products and connectivity services using satellite networks to in-orbit services such as orbital transportation, satellite maintenance and removal, as well as the tracking of space debris using ground-based radars. 5. Spacetech is experiencing sustained investor interest. Interest of venture capital and growth investors in the spacetech theme remains high. According to the Seraphim Space Index, investments in next-gen space tech businesses increased by 48% year-on-year to an all-time high of $12.4 billion in 2025. The high investor interest is illustrated by the fact that Seraphim Space Ventures 2, Seraphim's early-stage venture fund, exceeded its previous target of $100 million, with key investors including the British Business Bank, the National Security Strategic Investment Fund, as well as leading international defense and space industry players. Several portfolio holdings of the Trust completed new funding rounds in recent months, including D-Orbit's first close of its €110 million Series D round. Furthermore, Hawkeye 360, a space-based radio frequency intelligence and geospatial analytics firm and a portfolio company of the Trust, recently filed for an IPO on the New York Stock Exchange at an estimated fully diluted equity valuation of over $2 billion. Seraphim's broader ecosystem strengthens its origination capability. The Seraphim Space Accelerator identifies early-stage category leaders in Spacetech, providing access to emerging technologies and founding teams at the earliest stage. Together with its venture funds, this creates a multi-stage pipeline from incubation through to growth capital, enhancing potential deal flow into listed exposure via SSIT.